Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, where you can find the link to the website in the description below. The Federal Reserve just cut the Fed funds rate range by another 25 basis points at its November meeting. And we could see the interest rate cut extended into December and into 2025. Declining rates will help real estate investment trusts, or REITs for short, structures that tend to carry high debt. Lower financing costs could drive capital expenditure and boost gross margins and the bottom line. With all this said, a small cap, high yielding REIT to consider is Global Net Lease Inc. They're traded on New York Stock Exchange under symbol GNL. John?
Yeah, thanks, Mo. Yeah, the REIT's business model involves buying commercial properties that are then leased back to the occupant. Global Net Lease has properties at the end of September. Global Net Lease managed a portfolio of 1,223 properties, covering 61.9 million square feet. An impressive 96% actually of the properties are leased, with a weighted average remaining lease term of 6.3 years. This results in steady cash flow for years to come. The major risk for investors are the losses and significant debt obligations. Income investors willing to assume the risk receive regular dividends that have been in place for 10 years. And given that the GNL stock is down 25% from its 52-week high of $10.19 per share, the forward yield is high 14.4%.
How are the numbers looking? How did this redo in the third quarter?
Pretty solid. For generating record revenue of $518.6 million in 2023. Global Net Lease reported $605.9 million in revenue in the first 9 months of 2024, which was up 96.5% versus its $308.4 million for the same period in 2023. Third quarter revenue of $196.6 million made up for a 66.3% increase in revenue versus the third quarter of 2023. Now looking ahead, analysts estimate that revenue will surge by 57.3% to $810.3 million in 2024, followed by a slight decline to $800.2 million in 2025.
How is the profitability looking here?
A concern for investors is the company's inconsistency in delivering profitability. Global reported losses in 4 straight years, including a loss of $1.71 per diluted share in 2023. That's its biggest loss since 2014. Now, analysts expect Global Net Lease to narrow its loss to 12 cents per diluted share in 2024, and then report a loss of 9 cents per diluted share in 2025. Now, keep in mind that REITs generally look at the adjusted funds from operation, or AFFO, to decide on their dividend payout. In the case of Global Net Lease, it reported AFFO of 32 cents per share in the third quarter versus 33 cents per share in the second quarter and 36 cents per share in the year-ago third quarter. Now, the company will need to improve on this, but lower interest rates should help as long as the economy holds up. Now, looking ahead, Global Net Lease estimates AFFO of between $1.30 and $1.40 per share in 2024.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, how does this all impact the company's dividends?
Well, Global Net Lease is recording at a low point as far as dividends go, but the hope is that its operations will improve and allow for higher dividend payouts. Global Net Lease stock's current quarterly dividend is 27.5 cents per share, or $1.10 on an annual basis. The company has held its distribution at this level for 3 straight quarters. For example, from October 23 to January 2024, it paid out 35.5 cents per share, and prior to this, the quarterly dividend 40 cents per share dating back to April 2020. Forward yield of 14.4% is above the 5-year average yield of 12.77%. A Global Net Lease stock's dividend coverage ratio of 0.8 times is on the weak side, so there could be another dividend cut if the situation doesn't improve. We generally like to see higher dividends over time, of course, but strong expected increases in revenue and narrowing losses could lead to higher dividends down the road.
John, thank you so much for your insights. While Global Net Lease stock is not a typical dividend stock you would add given the dividend cut, an improvement in operation could allow for higher dividends. For contrarian income investors, Global Net Lease stock is a strong risk-reward opportunity that offers both major price appreciation and the collection of dividends. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.